Hi students, hope all are enjoying your holidays. In this video I am going to explain about double account system. So double accounting is a system of accounting prescribed by British law for public utility enterprises. Double account system is a method of presenting the financial statement of public utility undertakings like railways, electricity, gas, water supply, etc. These undertakings are incorporated under special act. They are not started for profit motive but for doing service to the public. They are generally run by government or by local authority except electric companies and tramways. They raise most of their fixed capital from public by issue of shares and debentures, so they are bound to give information to the public. The main object of double account system is not to show the financial position on a particular date, but to show how capital is being raised and how it is applied in purchase of fixed assets. For this purpose, two-chamber balance sheet is prepared. First part is capital receipts and capital expenditure, and second part is general balance sheet. Now we are going to see the main features of double account system. Generally, public utility undertaking needs a large amount of capital which is to be invested in fixed asset. Therefore, fixed assets, fixed liabilities and current assets and current liabilities are to be separately shown. Revenue account is prepared instead of profit and loss account. Net revenue account is prepared instead of profit and loss appropriation account. Normally, no adjustment of asset is made in the capital account. Normally in the balance sheet, we'll deduct depreciation from the concerned asset and we'll show in the balance sheet. But in double accounting system, we should not deduct the depreciation from the concerned asset, but it should be shown in the liability side as a fund. So fixed assets are recorded at their book value only, not deducted. Depreciation is not deducted. Okay. So main features of next feature is any kind of funds and reserve. Example: sinking fund, depreciation fund, general reserve, capital reserve, and balance of revenue or net revenue account are shown in the liability side of the general balance sheet. Discount and premiums are permanently treated as capital items. Loan capital, shares and stocks are treated as capital item. Interest on loan and debenture are to be charged against the net revenue account. Now we are going to see the capital account. Capital account is prepared under double account system. It is a system of capital receipts and capital expenditure. Normally, balance sheet contains fixed assets, fixed liabilities, current assets, current liabilities, etc. But in balance sheet, here we'll take in capital account, that is in under double account system. In capital account, we'll take only the fixed assets and fixed liabilities, that is non-current assets and non-current liabilities. Now we are going to see the format of capital account. Students, listen carefully. This one you are going to apply you are applying in the sum. Now in the normally capital account, take for example in partnership capital, we will take particulars, that is debit side and credit side. Opening balance and closing balance of capital will be entered in the capital account. But in double account system, that is whatever amount you are investing in fixed asset, that should be written in the expenditure side, that is capital expenditure, and whatever you are receiving in the form of fund, that one should be written in the capital receipt side. So what are the receipts we'll get for the business? How the capital will get for the business? By equity shares, by preference shares, by premium on stock, by debenture stock, etc. So first we have to take the capital receipt. So equity shares are issued for cash or whatever it may be. So equity shares should be written in the expenditure capital receipt side. Next, preference shares, premium on stock and debenture stocks. These are the total receipt. And for in capital account, there is 6 columns. That is in the capital expenditure side, that is here I have written as previous year, not previous year, expenditure up to that is up to the given date, and current year expenses you have to separately show in the column, and total expenditure, that is expenditure up to the previous year and current year you have to add, and you have to write in the total expenditure side. In the same way, capital receipt, that is receipt side also. So receipts up to the previous year and receipts that is current year receipts, both you have to add and you have to take in the total receipt. So we are getting capital in the form of equity shares, preference shares, premium on stock, debenture stock, etc. From this receipt you are going to purchase the fixed asset. So fixed asset you have to write in the capital expenditure side, that is to fixed asset, to machinery, tools, to land and building, or what are the fixed asset you have to write in the expenditure side. So you have to tally both the side. So if expenditure side is less, you have to write, that one also you have to transfer to the balance sheet, and if that is if receipt side is less, that one also you should transfer to the general balance sheet. Normally in trading account, either we will get either gross profit or gross loss. In the same way we will get either any one of the side, not both the side. Now we are going to see the format of general balance sheet. So general balance sheet is liabilities and assets, you know. So balance of capital if expenditure side is less. So here while explaining the sum, I'll tell you how to take the amount. So both the amount you have to take, that is total amount of expenditure side you have to, total amount of receipt side you have to take in the liability side, and total amount of expenditure you have to take in the asset side. Now current sundry you have to write in the liability side, you have to write the current liabilities, that is sundry creditors, bills payable, reserve fund, unclaimed dividend, revenue account balance if it is given in the sum. Next in the asset side you have to take the current asset, cash in hand, cash at bank, fictitious assets like preliminary expenses, sundry debtors, bills receivable, etc. So this is the general balance sheet. So you have to prepare capital account separately, and that balance should be transferred to the general balance sheet, and that you have to prepare the general balance sheet. So that is the balance sheet is split into two types, that is capital account and general balance sheet. That's why it is known as double account system. Now we are going to see a sum. The following balances are extracted from the books of Mrs. Flashlight Electric Company Limited. Now fixed asset, see here expenditure up to 1/1/2006, that is expenditure up to 1/1/2003, maybe previous year. So land and building 10 lakhs, machinery 15 lakh. So second point is addition during the year, that is during the current year they have purchased the machinery of 3,50,000. So expenditure up to 1/1/2006 you have to write in the, that is in previous year column, that is land and building 10 lakh, machinery in 15 lakh, and addition during the year, that is during the current year they have purchased 3,50,000 worth machinery, that you have to write in the second column of the expenditure side. Now depreciation fund, I already told you should not deduct the depreciation from the concerned asset. You have to take it as a fund, and you have to write in the liability side of the balance sheet. Now authorized capital 50 lakhs divided into equity shares of 100 each. Normally we will not write authorized capital in the balance sheet. We should not add the authorized capital in the balance sheet. Just we will write and we will draw the two lines. Now issued and fully paid up 20,000 equity shares of 100 each. Now please listen carefully. Issued and fully paid up 20,000 equity shares of 100 each, including 2,500 equity shares during the year. Here total equity shares issued is 20,000. In that 20,000, current years is 2,500. Okay, so 20,000 into 100 you will get that is 20 lakhs. Okay, in that 20 lakhs previous year is 17,500, that is 17,500 into 100 you will get 17 lakhs 50,000, and current years is 2,500 into 100 you will get 2 lakh 50,000. So you have to write 17 lakh 50,000 in the previous year column, that is receipts up to 1/1/2006, and 2 lakh 50,000 you have to write in the current years. Okay, next 7.5% debentures, rupees 10,000 secured by charge on fixed asset. So this one you have to write in the receipt side, that is capital receipt. Sundry creditor, sundry creditors, it is a current liability, so you have to write in the general balance sheet. Reserve fund also you have to write in the general balance sheet. Reserve fund investment at cost, that is reserve fund you have to write in the liability side. Reserve fund investment you have to write in the asset side, and market value you have to write in the inner column bracket side, but in the outer column you have to write 5 lakhs. Next, stock, that is it is a current asset, you have to write in the general balance sheet. Sundry debtor and cash at bank and cash in hand. Okay, so you have to write in the general balance sheet asset side. Now profit and loss account, it should be taken as net revenue account, so you have to write in the liability side of the general balance sheet. Now you are instructed to prepare capital account, general balance sheet on the same date under double account system. Now we are going to put this sum in the balance sheet. See, here to land expenditure up to 2000. First you see the column. First column is expenditure column, capital expenditure. Second column is expenditure up to 2006, that is up to previous year, expenditure during the year, and total expenditure you have to take. And the receipt side you have to write receipts up to 2006 and receipts during the year you have to take, and total receipts, please correct that, it is not total expenditure, it is total receipts. So here first you take the receipts. How you got, already I explained you, by equity shares. Equity receipts up to 1/1/2006 is 17,50,000, receipt during the year is 2,50,000. See, I'll explain again. Here issued fully paid 20,000 equity shares of 100 each, that is 20,000 equity shares of 100. See the fifth point, 20,000 equity shares of 100 each. In bracket it is given including 2,500 equity shares during the year, that is equity share of 100, that is each share value is 100. 20,000 into 100 you will get 20 lakhs. In that 20 lakhs, 17,50,000 is up to 1/1/2006 and 2,50,000 is current year's receipt. Okay, so here that's why we have written here as, that is by receipts, receipt up to 1/1/2006 17,50,000 and receipt during the year 2,50,000. Total receipt is 20 lakhs. Again debentures, that is debentures, even though it is a liability, but we are getting fund, we are getting cash inside. So 7.5% debentures 10 lakh, that is up to 1/1/2006. Current years there is for current year there is no debentures, so total receipt you have to take as 10 lakhs. So total receipts 27, that is up to 1/1/2006 27,50,000, and receipt during the year current year 2,50,000, and total receipt is 30 lakhs. Now we are going to see in the expenditure side. Here with the help of that the capital raised, we have applied in the fixed asset. To land and building, expenditure up to 10 lakh, that is up to 1/1/2006 is 10 lakh. In land and building no investment is made, no land and building is purchased in the current year, so total expenditure on land and building is 10 lakh. And machinery up to 1/1/2006, see in the previous slide. Here see the first slide, that is first point, expenditure up to 1/1/2006, land and building 10 lakh we have written in the column, machinery 15 lakh we have written in the column. Now current year, for current year, second point, addition during the year, that is during the current year they have purchased 3,50,000, that one we have to write in the that is expenditure during the year. Now so total expenditure up to 1/1/2006 is 25 lakhs and expenditure during the year is 3,50,000. Now total expenditure is 28,50,000. Total 28,50,000, but total expenditure here is 30 lakhs. Okay, now we have to balance both. So which side is less? So expenditure side is less, so you have to write that as to balance transfer to general balance sheet. You have to tally both the side, that is 30 lakhs minus 28,50,000 equal to 1,50,000. So both the side total is 30 lakhs. Now we are going to see the general balance sheet. So here I already told you both the amount you have to take in the balance sheet. Here, whatever you are getting in the expenditure side, that one you have to write in the asset side. That is, you have invested in the fixed asset. So, capital amount expended on works, that is 28,50,000. See, here 28,50,000, that is total expenditure side. You have purchased land and building and machinery worth 28,50,000. That one we are writing in the that is asset side as capital amount expended on works 28,50,000. Again, so you see the receipt side, that is total capital raised by equity shares by debentures is 30 lakh. That one also we are writing in the liability side, that is total capital is 30 lakhs. Here we will find the difference, that is 30 lakhs minus 1,50,000. Okay, so remaining 1,50,000 is the difference. Now next you have to take the current liability, sundry creditors. Next, net revenue account, that is net revenue account balance, that is it is given in the sum itself. See, that is net revenue balance is given in the 9th point, that is profit and loss account credit 2,02,500. you have to write in the general balance sheet in the liability side. Again, reserve fund always you have to write in the liability side 5 lakh. Again, depreciation fund, we should not deduct the depreciation from the concerned asset, you have to take it as a fund. Here depreciation is given for machinery and see the third point, depreciation fund is given for machinery and building, that one you have to write in the liability side. Okay, now all the liability side entry is over. Now we are going to see the asset side. First one I have already explained. Now next you have to take the current asset, that is stock 3,02,500. Next, sundry debtor 4,50,000 and reserve fund investment. See the question here, that is see 7th point. Reserve fund is 5 lakh, that one you have to write in the liability side, and reserve fund investment at cost 5 lakh you have to write in the outer column. If you want, you can write market value in the inner column. See, we have written in the balance sheet. Now cash at bank and cash in hand is given, so total balance sheet is 43,52,500. This is the double account system. Here we have split the divided the balance sheet into two parts, that is first one is capital receipts and capital expenditure, second part is general balance sheet. Whatever balance coming both the side, that is capital receipt side and capital expenditure side, that should be transferred to the general balance sheet. Okay, in the next class I am going to explain about net revenue account and that is revenue account. If you are having any doubt, you can ask me. Thank you.